We are live.
If you don't say we are live, did it happen? Welcome back, everyone, especially to our live viewers here. This is Jake, Ruth, and Daniel Pronk streaming to you live from New York and Calgary, Canada. We are a bunch of stock nerds, and we love talking about stocks. That's really all there is to it. And we are going to keep bringing this show to you guys every week. And if you are a subscriber to Stock Unlock, the company that we are both co-founders of, we appreciate your support. We do have a little plug. Reach out to your brokerages and tell them that they need Stock Unlock features in their platform. They need a partner. Shout out to Ralph in the chat, who really led the army here. If you guys could reach out to your brokerages and say, hey, you guys need this product, you should talk to this company. We are looking to expand. We are looking for partnerships. Let us know. Yeah. Daniel, I see you smiling over there. What do you think about that?
I mean, Ralph is just a hero. Ralph is in the chat right now, so he can let us know if he wants us to talk about this. But what everyone needs to know for sure is Ralph is a hero.
Yes, everyone say hello to Ralph in the chat. Good morning to you. So we have a really cool graphic to start off today. Oh, Dee, Dan, David.
Hello, everyone.
Girl Max, Sexo, KT.
Good I'm pouring my coffee right now. I had a little bit of a late start this morning, which is why the stream was about 2 minutes late. So I apologize, everyone.
Well, I'm right there with you, Daniel. I just almost burnt my mouth on the coffee that I have in front of me. So
amazing. All right, let's do it.
Yeah, I think around half of our viewers are US, so they're probably having coffee too. For the Europe viewers, maybe it's more of like a tea time. And if you're watching at night somewhere else in the world, sorry that it's hard to pick a time that works for everyone. But Daniel, you actually sent me this graphic this week. For the people who are listening via audio on Spotify, maybe we can just describe quickly what we're looking at here. And I'd love to hear your opinion about it.
Yeah, so this chart shows the S&P 500 returns to date. Well, I believe it's actually until about the end of May. So the S&P 500 is up 10%. But if you take a look at the top 7 companies in the S&P 500, they are up 44%. And they make up a large portion of the S&P 500. So the S&P 500, excluding the top 7 companies, is actually only up 1% year to date, which basically means that this entire rally that we've seen year to date, I think the S&P 500 is up 20% now, is being led by literally a handful of companies. And the S&P 500 is basically becoming more and more concentrated in these companies as they continue to rally. So think about Microsoft, Amazon, Apple, Google, Tesla, Nvidia, Meta. These massive companies are just killing it this year, better than I thought they were going to do, to be totally honest. And yeah, that's basically what this chart is showing.
Oh, dude, haven't you heard Nvidia's going to the moon? Everyone knows that.
I think it's already like past the moon.
Or are we on like Mars? Where are we at?
I don't know. Maybe Neptune.
Wow. Okay. Really throwing me your planet knowledge right now. I guess there's only 9 though. So yeah, when you showed me this graphic, Daniel, first my eyes popped out of my head because I did start seeing news headlines in my morning reads, basically newsletters sent to my email. Hey, we're back in a bull market. I was like, we're in a what? Yep. Because then you looked at other articles, depending on where you want to read, you can justify any economic situation, it seems like, because there's other articles that say, hey, we're going into a recession, the consumer is spending less. So I don't really know what to make of this. It makes me not really want to own indexes. One thing I also found interesting, but didn't study too much yet, is the concentration of stocks in the index. So one thing you said, Daniel, was these stocks are starting to take up more and more of the index. I'm curious to hear if you have opinions about if that's like good or bad. For index investors, is this normal?
Personally, just my opinion, is it's not ideal because typically, you buy an index to be diversified. And with these stocks making up more and more of the index, you're actually becoming less diversified and more reliant on these 7 companies. And I agree with you personally. I think that, let me reword that. I would not be comfortable buying the indexes right now with all this going on, because personally, I think, Microsoft, Apple, and Nvidia and Tesla specifically are quite expensive. We added in stock-based compensation metrics to Stock Unlock, which is awesome, by the way. Yeah, big huge update news. And I was looking at Google's price to free cash flow excluding stock-based compensation, and it's at 37.
Oh, we're bringing that up right now.
Yeah, which is like actually not that cheap.
Yeah.
So when you actually factor in the stock-based compensation, and the reason we factor in the stock-based compensation is because it is a non-cash expense for the business. So what the companies can do is add this expense back into their operating cash flow. But stock-based compensation is a real expense to shareholders because it dilutes you. So yes, it should probably be factored in when you're valuing a business. And what is that? What is it at today, Jake? Is it still around 37?
So if we're looking at the price to free cash flow excluding stock-based compensation, it is just above 37. Without stock-based compensation, it's 25. However, Daniel, even though 37 just on paper sounds expensive, and I agree with you, I'm not going to make an argument that this is cheap. It does seem that historically Google has traded at these ratios or above over the last decade. One thing I wanted to prove to myself is to see, okay, well, what would my cash flow yield on cost be? Which is a really great way to look at share buying. The free cash flow yield literally today on the share price might be low. However, as they continue to make more free cash flow, if you use your real cost of the stock and not the current price that it's trading for, which is really what you paid for it, that would be the free cash flow yield on cost. So here's a good example. Google was trading on a price of free cash flow in 2016, excluding stock-based compensation of 44. That's higher than we were today.
Mm-hmm.
And if you bought that, your free cash flow yield on cost will be 12%. So I understand, Daniel, you did not say don't buy. You didn't say this is bad. But I do think it is interesting, depending on the company you're looking at, where if Google continues to perform as it has historically, I don't actually think this is a wild price to pay if you're just judging based on this one single metric. Not financial advice, just looking at the math. And you can take a drink for that for people who are playing the drinking game here. And I hope it's water.
Yeah, I mean, relative to its history, it's probably about average. If you scroll down, you'll be able to see the average of that metric.
Ah, yes. So for those of you who aren't aware, this was added from user feedback along with all these columns. But
yeah, so average is
right.
39 over the past 13 years. So it is slightly below average still, but still in real terms, a 37 price to free cash flow excluding stock-based compensation is like on the higher end. Still pretty expensive. I think Microsoft we found was at 50.
Oh, dude, I forgot that we added this one. Oh, we have so many fun metrics. So for those of you who are watching the video or if you're listening to audio, you can type in SBC, which are just the letters that stand for stock-based compensation. And then you can see now we have 1, 2. Okay, we have 8. Let's go. Oh, no, sorry. Yes, 8.
Yeah.
So we also have stock-based compensation as a percent of free cash flow, which is another good way
Let's
to
take a
see.
look at that one. Let's take a look at that one and just remove all the other ones.
You got it, Daniel. Lead us off here. How should we think about this metric?
Well, this is stock-based compensation as a percent of free cash flow, right? So if this is going higher, then it means that stock-based compensation is making up more and more of the free cash flow and should be factored in more, I would guess. So what is it at right now? Is it at like 38%? Was that 28%?
Now,
32%?
it is at 32.5. And we can look at what other companies do here as well, just to give a little bit of comparison of other big tech.
Yeah, let's look at Microsoft and Apple. I think Google is the highest.
It's like you've looked at this stuff before. Except for there's this one small period of time where Microsoft just like popped up, but it seems like Google does use stock-based compensation. And I don't want to send us on a tailspin here, Daniel, but there are split opinions about if stock-based compensation is good and when it should be used. And I see people disagreeing with this all over Twitter, all over the internet. Do you think stock-based compensation is good, or if it's more nuanced than that? Like when you're looking to analyze a company, are these red flags to you? Does it make you look at certain things deeper? Like what should investors be thinking when they see these values? Because this is like a lot of data to analyze.
I don't love it. I mean, I own Google stock, right? So I mean, obviously, there's a point where I'll just be like, okay, fine, that's just the business. It is what it is. But in a perfect world, I would love stock-based compensation to be low. And a lot of the businesses that I own, like Equitable Bank, for example, there, everyone can take a shot.
Oh, there you
We
go.
made it 10 minutes. We
Shout
made
out
it 10,
Canada.
we made it 10 minutes without me talking about Equitable Bank. But seriously, the company, I think they do something like $2 million of stock-based compensation a quarter. They generate 270 something million dollars a quarter in revenue now, over $100 million in earnings. So if you take a look at the stock-based compensation as a percent of the profits the business generates, the earnings, it's like 2%. So it's very low. And I like to see that because it basically just shows that the insiders are not taking on this massive stock-based compensation to dilute the shareholders. Because if you have really high stock-based compensation, you're basically diluting the shareholders to do that, which is me. I don't like that. And one thing I've noticed is these companies that have low stock-based compensation, again, like Equitable Bank, they typically have large insider ownership too. So the largest shareholder of that stock owns about 20% of the company. So if you think about it, if they were to do massive stock-based compensation, they would actually be diluting themselves, the insiders. So I find those things kind of go hand in hand. When there's large insider ownership, they try to keep the stock-based compensation low because they don't want to dilute their own positions. But then you also have to think, well, what does that actually say about stock-based compensation as a whole then? So yeah, in a perfect world, I would like it to be low across the board, but I just don't think that's going to happen.
Interesting. Yeah. Another thing to keep in mind here, too, and I know, well, here we go again, talking about stocks that people play the drinking game with. Airbnb. The way Airbnb handles stock based compensation is they do give stock based compensation to employees. However, they offset that with share buybacks.
Yeah,
As
but you
Daniel
got
was
to
saying before, that prevents the dilution that he was talking about. So you could see that too here with some of these companies. Like you could obviously Apple, the top line here, they have been, even though they do have stock-based compensation, it is way farther offset by their share buyback. So you
yeah,
can look for management doing things like that.
but the company buying back shares is a real expense still. They're having to use free cash flow, a portion of free cash flow, just to keep the shares at zero. So you got to think about that too. Like, yes, cool. They're using free cash flow to buy back shares and offset dilution from stock-based compensation, but it's like they're still using the company's profits to do that. So what if they didn't do that? Then you'd be diluted. So they have to use some of their profits to offset that expense. It's a real expense.
Are you saying that is a bad thing if the company can afford it, or that it like that
I'm
depends? I
saying
think I might
I'm
take the other side of this SBC debate. So I'm just trying to
I'm not
frame.
I'm not saying I'm not going to make any blanket statement here because I think it's way too situational.
Fair.
So, for example, if a company is doing, let's say, 5% stock-based compensation of free cash flow, and then they take 5% of their free cash flow to buy back those shares and not dilute shareholders, then that's probably not a big deal to me. But if their stock-based compensation is 90% of free cash flow, and then they're taking 90% of their free cash flow to buy back shares just to offset that dilution, then at the end of the day, you got to be like, okay, well, me as a shareholder, how much free cash flow am I actually getting here then? You're getting about 10% of the reported number. So I don't have any examples off the top of my head, but that's kind of how I would think about it.
Shopify really messing up the graph over here. No, that's super fair, and I totally agree with you. It is way too nuanced to like make a blanket statement, but I like to make mistakes on live shows, so I will try to make a blanket statement. I think stock-based compensation is a great tool, but with great power comes great responsibility. So I've worked at these tech companies before. I was at Oscar Health. They went public. The way that you get employees to stay at these companies, especially when engineers have competing offers from Amazon, Google for more money than what the startup can offer, is they give you shares in the company. This is typically on a vesting schedule. So it is there's two things that it does here. One, it retains the employee because they have to stay for a certain amount of time, and the longer they stay, the more shares they get. And then two, there's mutually aligned incentives where, of course, when the business does well and the business goes public and the market value of the company increases, which is, of course, your job as an employee at that company, you then share some of that upside. So going back to Airbnb, I believe for that particular company, they are able to retain top talent and align incentives with employees by giving stock-based compensation. Now, to give credit to what you were saying, Daniel, I do think it is a real expense when a business buys back shares. The only other counter I had towards what you were saying is while yes, that does take out of the business's profits and the cash they could use in terms of share appreciation, in theory, if the value of the company stays the same and they bought back shares, the value of the shares that you own will go up. So it's up to each investor to decide, I guess, if that's a good thing or bad thing, which it seems like where you and I are agreeing here. It's just not really a binary situation. But I personally am a fan of stock-based compensation when done responsibly. You can see if it's done responsibly by looking at to see what percentage of the free cash flow it is, as you were saying, Daniel, as well as if they are buying back shares, making sure that they're not using all of their cash, eating into all of their cash flow, because then, of course, they're having less money to reinvest back into the business.
Yeah, you know what? I think I agree with you. And actually, I think I was reading, I don't know where I read it, but stock-based compensation, I believe, initially came into play to try and get the employees to think like shareholders. But then what ended up happening is, they would get their options and then just immediately sell, which is a lot of the time what you see. So they're not actually becoming large shareholders of the business themselves. But it initially was to try and get employees to think like shareholders. What else was I going to say? Oh yeah, Snapchat. Snapchat is a funny story about this because I'm going to hold off on that story and make sure that my facts are correct.
Dude, we've talked about Snap a couple times, and it really frustrates me because I've been a user of Snapchat for over a decade. I love their product. Like, I love it, but I hate the business.
Yep, I will not own this stock.
Are you doing some fact checking here? Or you want to punt that story down for later in the show?
Yeah, let's just move on, and I'm going to make sure I'm correct about this, and I might not be. So let's just continue on.
Awesome. Alex Pull, I see you in the chat. Thanks for coming by every week. Just so people know who are listening to the show, it seems like there is a water drinking game where if Daniel says EQB or if I say this is not financial advice, I guess that one doesn't count because I put in air quotes. Take a drink of coffee, take a drink of water. Apparently that happens a lot. Also, we are watching the chat. So if you have any stocks that you want us to analyze, we are going to be taking a lot of live questions today. Likely we'll be keeping it 2 stocks. And back to you, Daniel. I see that finger up.
Raising my hand, my turn. No. All right. So
I pick you.
Thank you, sir. All right. So here, this is Snapchat. We can see that the company has free cash flow in the trailing 12 months of $52 million, and they have $4.1 billion of total cash. So they're a very cash-rich company. I believe that Snapchat announced that, well, actually, let me see their stock-based compensation. Their stock-based compensation was $1.43 billion in the trailing 12 months, all right? So they said at the beginning of the year that they were going to buy back $1 billion of shares to offset stock-based compensation that they do. We can clearly see that $1 billion buyback is not going to offset the SBC. And then also the company only generated $52 million of free cash flow in the past year. So what that means is that for them to try and offset their SBC, they're actually going to be eating into this $4 billion cash position. And it's going to probably drop down closer to $3 billion over the next year just to offset the SBC that they're doing. And you can see that this is already happening. Like their cash was $5 billion back here just a year ago. So they're spending almost $1 billion a year to offset their SBC. And it's not even coming from the company's free cash flow. So this to me is not good. I don't like that at all.
I'm trying to see where they got that money from. I'm actually like on their financial statements right now because they must have like taken out debt or like diluted or something because they're not making money.
Yeah, I don't know where it came from. Probably an IPO of some sort way back in the day or some sort of fundraising.
So from the 2021 December report to the following report, so Q4 2021 to Q1 2022, it looks like their long-term debt jumped from 2.25 billion to 3.74 billion. And you could actually see another jump that happened back from Q1 to Q2 in 2020. And I believe that actually lined up with the cash position that you were looking at, Daniel. So not only are they buying back shares, but you're going to ask yourself, okay, if they're not making money, where's the money coming from that they're using to buy back the shares? It seems like it's coming from debt. So you really better hope if you own this stock that they are going to figure out a way to become profitable, pay off that debt, and make this all work out. To me, Daniel, this is actually an example of a stock where I'm not really a huge fan of the stock-based compensation.
Yeah.
I'm not sure if you
I agree. I think I kind of think Snapchat became public to make the insiders rich and to basically make no shareholder value, unfortunately. Just based on the numbers, that's like every time I look at it, that's the conclusion I come to.
Fair enough.
Insiders just make so much money, and then they dilute the shareholders to do it.
Yeah, I'm going to quickly share and show what I was looking at before, just so people know how to do this themselves. Also, it seems like we do have some comments in the chat.
Yeah,
I'm dealing with.
we should get to those. We've been talking about stock-based compensation for a minute now.
I love stock-based compensation. Anyways, if you are on Stock Unlock, we have great visualizations of the financial statements. These are very beginner-friendly as well as saving time for pros. So just up here in liabilities, you can see 70% of their liabilities is long-term debt. Definitely interesting to see. And this is their cash position, similar to what Daniel was showing before. So let's keep in mind where these bumps are in the cash position. If you scroll down on their balance sheet and then go to their long-term debt, I like clicking on it just to see the trends here. You can see it bumps in similar positions. So you might want to do a little bit of digging just because in reality, you should go to their 10Q just to be really sure this is where the cash came from. I am being a little just qualitative looking at the financials, but it does seem like it's coming from debt.
Yeah.
Yeah. Well,
all right.
I will not be buying Snap stock anytime soon, but I will continue to use the app every day. I'm cheering for them too. Like, I really want this company to do well. I want Snapchat to turn around and surprise everyone. Like,
I think they
maybe they
need new
make the best
management.
like AI. Maybe they come out with a crazy pair of like, glasses that are better than Apple VR or Quest. Do I think that's going to happen? Hell no, I don't think it's going to happen. Do I want it to happen? Hell yes. That would be great. Let's go, Trevor. CEO
Fair
Snap.
enough. All right. Yeah, I guess we can get to the chat. We have a few tickers people want us to take a look at. First, I'm going to give a shout out to Alex Pohl. They are in our live streams every single week, and they're actually going through my book and giving me a lot of great feedback. So, Alex, really appreciate that. Thank you. And let's do it.
Yeah, lead us off here. We love all these comments too. If you think we're missing your comment, feel free to send it again. We try so hard to get through all of these, but just know time is a thing. And unfortunately, we usually don't have time to get through all of them, but we do our best.
Okay.
I haven't heard of this stock yet. What is this?
CPRX. I will share my screen here in a moment. Oh, it's a pharmaceuticals company. Okay.
Do you want to be screen sharing? There we go.
Yeah, I'm doing it.
And also, TRU True in the chat says, "Wait, people still use Snapchat." I find offense to that. I use Snapchat still.
Jake, I don't know if you've noticed, but I turned my Snapchat notifications off, so I don't know if you're snapping me, but I'm probably not looking at them.
Yeah, don't worry about it, dude. It's fine.
Yeah, it's fine. Just ignoring you. It's all good.
I noticed, and I was actually about to send you a message in the platform being like, "Hey, like, did you watch that last video I sent?" And I was typing it, and I'm like, "Oh, no, I'm such a loser. Like, I'm not going to send this." And I just, like, backspaced it. It was like, if Daniel's not going to watch my snaps, it's fine. Anyways, please take us back to the stocks here.
Okay, this one is Catalyst Pharmaceuticals, biotech company. Looks like they've been around since 2006, had a rough time in 08. But since about 2016, they're up 2,000%, 1,900% now. They really ran here in 2020. Interesting. Apparently 10% free cash flow yield still. It's crazy. Looks like the company's growing. But the problem for me with these businesses in the biotech industry is I just have no idea what's going on with them. So this is a biopharmaceutical company which engages in the developing and commercializing, I can't say these words.
Commercialization.
Thank you. Novel medicines for patients living with rare diseases, including Lambert-Eaton myasthenic syndrome, congenital myasthenic syndrome, Musk antibody positive myasthenia gravis. So you get the point. I don't even know what these words are.
You're doing great. You're doing great.
Thank you, man.
Can you spell those for us too phonetically?
No. But this is my problem with them. So yeah, I mean the free cash flow yield looks great. The company's growing, the stock is up. But in terms of what this business does, I have no freaking clue. And which means that it's just out of my circle of competence. So
the insight score is in super high. I actually want to ask Mark. Let us know in the chat. Are you invested in this stock? Are you looking at it? Is there a particular part of the business you want us to check out? Let us know.
Can you dumb down what they do for simpletons like me? Because I have
Well,
no idea.
it sounds they make medicine for rare diseases, not to overgeneralize it, but I do agree with you, Daniel. For people who are not in the pharmaceutical industry, the process of creating a drug, the trials that you have to run through, the hoops there, lots of legal battles, and there's also lots of M&A in this industry as well. And I know a lot of investors invest for that. There'll be smaller companies that take something through a couple of trials and then they sell out to someone like Pfizer who's able to scale it. So
I mean,
it is a lot to understand.
In terms of the inside score here, I mean, it's very good. They have a current ratio of 3.51. They're debt free. Shares have increased, but they have more cash than total liabilities. So it's a very financially sound business. Growth is also very good. I mean, revenue, operating cash flow, everything is increasing by over 60%. Profitability is a perfect 5. Gross margin 85%. ROIC is very high, and it's beating the S&P 500. So in terms of just like the financials of this business and the fundamentals, it looks pretty dang good.
Those margins are wild good. Those are like technology stock margins right there.
Yeah, it also looks like they kind of flatlined in 2020 in terms of revenue, and then the revenue just started basically exploding in 2021. So I would want to know what that was about. Let's take a look at their cash flow. So their cash flow at some point in 2019 flipped from negative to positive, and now it's just exploded as well. So I'd really just want to know like what is actually happening there if I were going to take a serious look at this business. And then insiders exercised. When was the last insider buy? Q3 2020. Since then, it looks like insiders have been selling quite a bit, and this is recently too. This is all in 2023. So, yeah, I mean, fundamentally, it looks like a strong business, but in terms of what it does and like this industry, I have no idea. So I would stay away from it personally.
Yeah, we do have someone in the chat who is adding to this conversation. Thank you. If I am mispronouncing this name, let me know. Obaid Hashmi says, biotechnology is the future of pharmaceuticals and medicine. Interesting. Yeah. You know, it's a little bit unfortunate. Daniel and I definitely do not like talking outside of our wheelhouse, and pharmacy stocks are hard. But the financials
it's very hard for me. It's
the financials are beautiful. So my only question is, why are the insiders selling? And then obviously, if you were to look into this business, go to the company's investor relations page. My open questions from here, Daniel, are: did they have a drug that was approved? Is this company a potential buyout target? And then obviously, what other pharmaceutical companies are making drugs, have them in the pipeline that could potentially like be a competitor? What's their pricing power? All that fun stuff.
Yep, all that fun stuff.
All right, let's take another one.
Okay. Let's take a look at Obaid gave us Enphase. Let's take a look at Enphase. This is a stock that I've not looked at in a while, actually.
Have you talked about this before? I feel like you have.
I don't know, to be honest.
You talked about all the stocks at this point. Also, hello, Jeffrey Morgan. You finally caught the live. Great to see you. If anyone is listening to the recording, that is great. We appreciate your support. If you are ever free on a Saturday morning, the lives are super fun. We got a lot of people in the chat, and we would love to meet you. So come hang out sometimes and share us with a friend if you're enjoying the show. We're trying to grow.
Okay, so since 2017, over the past 6 years, this stock is up 22,000%. That is a lot. So let's take a look
not
at
bad.
Yeah, not bad at all. So the financials, the revenue looks like it was kind of having a hard time growing from 2015 to down here in 2017. The revenue actually dropped by about 30%. Then around here, the revenue has started growing significantly. And now the revenue is up, what would that be? Like 9x, almost 10x in the past 6 years. That's pretty good.
Yeah, looks like their margins are expanding as well. This is another super high insight score stock, so I'm wondering if people are finding these on our stock screener.
So operating cash flow was 3 million in 2018. It is now 900 million. And it looks like the company is basically producing a record amount right now, about 246 million a quarter. This is a solar company, by the way. I don't know specifically what they do in the solar industry, but believe they sell some sort of solar panels. Free cash flow is also going up. Let's take a look at what insiders are doing.
Yeah, and I'm curious to hear, Daniel, if you are generally bullish on the solar industry or not. I'm seeing a few comments in the chat of people saying I'm super bullish on this. Some people seem unsure.
Yeah, I don't really. I would say I'm neutral at this point. I mean, I think there's a lot of growth to the solar industry, but yeah, I don't have my thoughts together enough to give a better answer than that. I think that there's going to see a lot of top line growth, but I am not certain how much bottom line growth there will be.
Yeah, so
I just don't know.
every investor has a different style. I think I am very extreme with any stock I buy. I don't swing. I don't trade short term. I'm like, I want to hold this thing for a very long time. Tinfoil hat here. I cannot trust where the energy industry is going. I think that there's like a lot of advancements being made right now across nuclear fission. And no, it is not consumer ready yet. Are we going to see it in 5 years? Probably not. But 5, 10 years out, I would not be surprised if there were some major advancements in energy. We are, as a civilization, slowly approaching the cost of energy going down eventually to zero, which in theory we should be able to do. I don't know if that's going to happen in 5 years, 10, 20, but it's enough for me where someone were to ask me, are you bullish on the solar industry? Sure, like right now it's good, but I don't feel confident that it will be performing the same way in 5 years. I think other people may viscerally disagree with me there, say, I'm stupid, and this is the future you could see in their financials today. That's great, and I think that's why there's opportunity in the markets because we all have different opinions. But I'd love in the chat to see if how people are feeling about solar. You bullish? What about wind energy? Tell us what you're thinking. And thank you for this suggestion, Obaid.
Yeah, so Obaid says Enphase is a leader with solar tech in the USA, expanding in Europe now. Their IQ8 microinverter is state of the art. I just took a quick look at the company's valuation. For a while there, I thought that Enphase was quite expensive, to be honest, and I'll show you why here. I don't think that the valuation looks crazy anymore, but if we go price to free cash flow, this company at one point was trading for 138. It has now come down to about 30, which for a company growing its revenue so significantly and its free cash flow so significantly, like over the past, let's do 5 years, revenue has compounded at 61% per year. What is free cash flow compounded at? Free cash flow has compounded at 170%. Maybe we'll zoom in a little bit. Yeah, it's starting from a low base, so it's going to be wild.
Okay. Just like that
about 80%, but revenue is still compounding at 50%. So a price to free cash flow of 30 for a business growing that quick, if they can keep it up, honestly, I don't think it's that expensive.
Can we do my favorite thing here and pull up the price to the free cash flow yield on cost? Because while it does look expensive when you bought it at 137, I do wonder if your yield on cost is actually getting to a sane amount because the company has grown its free cash flow so much.
Let's take a look. I think you're actually probably right.
And this is what makes investing so fun.
Actually, wait. Yeah, so back here in 2019, price to free cash flow at the time was 117, but the free cash flow yield on cost now is 20%.
Yeah.
So
let's be fair to ourselves, Daniel. Let's put ourselves back in time. If you and I were back in time looking at the stock, I can predict we would both be saying this looks insanely expensive. It's trading over 100 times price to free cash flow. Like this company will have to grow a lot. And then there's savvy investors who have done their research and say, hey, you know what? I could be wrong, but I have a reasonable assumption based on the research I've done that it will go up. And if that was your decision, you would have been right here. So 117 looks expensive, but now flash forward to today, 20% free cash flow yield on cost is really great. So
that's good. Yeah.
Oh yeah.
No, you're totally right. You just have to know that if you're taking a look at a stock with 117% price ratio, it means that it needs to grow significantly and quickly to justify that price ratio. And a lot of companies just can't grow that quickly. So basically what that means is the higher the price ratio, typically the more risk you're taking on because the more future growth you're buying. Now, Enphase here, I mean, they grew free cash flow from 29 million in 2019 to 830 million within the next 4 years. So what would that be? That's like 25x free cash flow in 4 years, which is just crazy. So they did it. They grew their free cash flow that much. But I don't think that this should be the standard. I don't think that this is replicatable by a lot of companies. This is quite impressive. So just be careful.
I'm gonna role play a bit here for people listening. Just this is not real what I'm about to do, but let's imagine I'm a Nvidia shareholder, Daniel. Even though the price of free cash flow right now is at like 175 or whatever it is, they're gonna grow into that. So
What for what?
for Nvidia, so right now there's stocks in the market that look like this, and we are currently saying today that these stocks are way overvalued. I'm just trying to throw the dog a bone here because we do have people disagree with us on these. That we could see this play out for stocks like Nvidia. We do know that they have to maintain very crazy growth to grow into the valuation. But I don't think it's fair to say, which we haven't, but we can't say that cannot happen. It is very possible. So I'm just putting on my Nvidia bro hat. It's going to the moon saying, hey, it's expensive for a reason, man. They're going to keep doubling free cash flow for the next 5 years.
I mean, anything is possible. It could happen, right? It's just all I'm trying to say is when you're buying stocks at these ratios, let's say Nvidia's at a price to free cash flow now of 186. So let's say, well, actually, what we can do here is go to our DCF tool and take a look at what the market is pricing in.
Let's go. Is this one of the reverse DCFs?
Yeah.
Nice. Yeah. So what we're doing here, what Daniel's doing here, which is awesome, is you can use this DCF calculator, look at the share price, and then plug in inputs to try to justify what the stock and the fundamentals would have to do for you to get, for example, a 10% compounded return over the next X years. It's pretty cool stuff. You're really good at this too. It's really fun watching you play with the graph. For those of you who are on audio right now, we are looking at a graph where you can see historical stock price as well as fundamentals. And then the user, which you could use all this stuff for free, has the ability to enter in your mathematical assumptions. This is just a math exercise. These are not seller buy targets, and it 100% depends on the user input. So it's just like a great visualization framework for this stuff.
Okay, so Nvidia at its current price would have to grow free cash flow at 38% per year over the next 5 years and trade at a 60 price to free cash flow by 2080. And if you scroll down, this is what the free cash flow chart would have to look like over the next 5 years. It would have to go from 5 billion today in the trailing 12 months to 25 billion. So 5x, or basically almost exactly 5x in 5 years. Now, again, I'm not saying that this can't happen. But what this means is that this is what the market right here is currently pricing in. So if anything happens over the next 5 years, and the future is not 100% knowable, right? No one knows for sure what the future holds. So when a stock is already pricing in at this level of growth, if it doesn't happen and some event happens, let's say even 3 years out, some major event happens and Nvidia's revenue maybe grows by still an amazing 20%. And your terminal value here is cut in half, and the stock fair value is actually 50% lower, and it's still achieved an amazing 20% free cash flow growth rate and a 60 price to free cash flow. So whenever I see companies this expensive, it's like there is so much future growth already priced in, and I just have to admit to myself that I don't know what the future looks like for certain. And if this growth rate is not achieved, then the stock is overvalued, and it's probably going to come down.
Yeah, I will take off my... Sorry, what were you going to say? One more thing?
I was just going to say, it's just, that is risk. When you're paying for that much future value today, you're taking on a lot of risk.
Yeah, I will take off my role-playing NVIDIA bro hat, because as people who watch the show often, they know you and I actually agree here. There's a lot of risk priced in. Yes. One thing that bothers me, and I don't mean to rustle feathers here, but of course it's free speech. I can let everyone know my opinion. The amount of people who are in NVIDIA stock and buying it way over exceeds what I would think is a realistic threshold of the number of people that actually understand the semiconductor industry. And this is coming from someone who works in tech, like actually understanding semiconductors, how to build them, where computing's going, how fast things are compounding on each other in terms of where this technology is going. I'm just trying to bring things into question to say I see a lot of people out there that seem very convinced that they know where NVIDIA is going. And I look at their background and look at what they're into, and it's just hard for me to believe that all these people are actual experts. It makes me think of the Peter Lynch speech when he talks about I forgot what company it was, but he was reading the sheet. He's like, oh, quad core, silicone based, blah, blah, blah. And then he ends it. And he's like, if you ever buy a piece of crap like that, when you can't explain it to a 5-year-old, that's how you lose money in the stock market. So just be careful out there, know what you're buying. And then if you do make tons of money on the stock, we are very happy for you. Please come back. Keep us honest. We never cheer for things to go down. We never want people to lose money. And we aren't envious when that happens. Happy community here. So
we just try to explain the risk associated with things, because you have to factor in the risk. And personally, I don't think risk is talked about enough on YouTube or in the financial communities. So just always consider the risk. It's fun when things are going up, but when things go up, they also become more risky.
So there's a really interesting comment here, and we love comments like this, ones that make you think. From David, when energy costs start approaching zero, can you imagine what that will do to many company margins? So when I first read this, I was a little bit confused because I was like, well, if energy prices go to zero, the energy companies are low-key effed. But I think what David's saying here is the non-energy companies, the prices basically for everything from like running compute infrastructure at big cloud companies to just keeping the lights on in warehouses, your like standard operating costs, even the price of shipping things. So you are normally paying for plane flights, the gas that it takes to get there, trucking across the country. All those costs are eventually baked in, which makes sense, right? That's how the economy works. This is a really interesting point, though. What will change with companies when this happens, right? Will their price ratios go up because they're more profitable? I mean, this is not something I've thought about at all, but it seems like a really good, deep thinking question. Any thoughts here, Daniel?
Well, my thought is energy prices are not going to go to zero. I just don't see it happening.
Let's play along here.
Okay.
I know you don't think that, but let's say if, which you don't agree with, but put yourself here. If energy prices go to zero, then in that fake situation, what do you think would happen to stock prices multiples across the board?
I mean, theoretically, if a company becomes more profitable and its margins go up, then yes, I could see its price ratios expanding. That's typically what happens. But also, you never know. Like for a commodities business, let's say, if every single player in the industry now has their energy costs go to zero, then what they would probably do is lower their prices to try and compete with competition on pricing, which would cause the margins to just go back down. So I don't know if companies would pass those savings on to their consumers, basically just offset that or not. I think some industries would have to compete, like commodities.
Supply-demand side economics, yeah.
But yeah, I don't know if that would be across the board. I don't know if that would be a blanket statement or not, but I could see that happening in some industries. But personally, again, I don't think, energy costs are going to zero.
Fair.
I strongly disagree.
I'm on the other side of that. I'm not going to tell you by when. If you were to ask me, hey, Jake, pick over under 10 years, over 10 years, if I had to pick. But
yeah, I think it would
I
be
like
over
watching
10 years.
trends, and I do think that the cost of energy is going to continue to approach zero. What I imagine will happen within our lifetime is there will be a product that you can put on the roof of your house or something like a micro, like nuclear reactor, whatever it is, that you can have a sustainable energy source. Maybe we get better with solar. What a lot of people don't know, the solar energy conversion on the silicon panels we have today, it has been getting better. I think 5 or 10 years ago, it was about 15% conversion. So that means all the sunlight that actually hits this,
but
only about 15%. They've got it up. My point here is there's a lot of room to grow for these new energy technologies to become more and more efficient. Now, does that mean it's going to go to zero within the next 5 or 10 years? We don't know.
But Jake, can you explain to me how it goes to zero? How does the cost of energy go to zero in your brain? In your mind? I'm not trying to be, and by the way, I am genuinely curious. I'm not trying to be rude. I genuinely want to know.
For everyone watching, yeah, Daniel and I are like super close. So if it seems like we're getting at each other, it's like very friendly banter. And I honestly love disagreeing with you on things. It makes it more fun.
Yeah, why not?
Yeah, so this is like putting on a technologist hat, like not really talking about stocks anymore. But
Mhm.
if you think about physics, reality, how the world works, energy is never created or destroyed. We are constantly losing energy, even from things of walking on the street, the taps of your feet, that energy is dissipating. We're never using it again. So, a more simple example of that is all the sun that hits us, all the wind that hits us. In theory, if you can harness all that, it is very easy to see the math where the cost of energy eventually goes to zero. One of the most realistic things I've seen is people are trying to build self-sustaining, like unconnected from the grid units that you put on top of your house, whether that's like driven by solar or if they're trying to make nuclear reactors, or even when they get nuclear fission going, if that can happen on a micro scale. I understand that technology is not here today, but technology advances very quickly. So where I see the industry going is moving away from grid technology, moving away from like the Tesla huge coils that we have everywhere. You know, we're constantly advancing and always living. I'm almost done, by the way. Always living in a very finite point in time. So like while it seems like we're super advanced and like things feel great, it felt like that 100 years ago too, and they would not have been able to predict all the advancements there. So that is why I personally believe, from the way technology is advancing in our future, the trend will continue to go to push it down to zero. What I think will be complicated here is politics, because there's lots of government subsidies around energy. There's lots of 401k plans and lots of wealth in these energy funds, in utilities. I know you have money invested in utilities. So it is kind of a scary thought, thinking what will happen to industries, who will die, who will be rebirthed when this happens. I have no idea, but I do think it will get very political as well.
So,
You don't have to agree with me, but that is why I believe it will
but
go
the
to
thing
zero.
is okay. So let's say solar technology becomes super efficient, right? And people start putting them on their houses. It's still not a zero cost. You have to buy the solar panels. Those solar panels have to be mined. They have to be created by a company. Like, it's not just, hey, we all have free energy. Like, there will always be some sort of cost to energy. And then there will also be maintenance, because solar panels today don't last forever. Maybe they will in the future, but currently I believe they have like a 20 or 30-year lifespan. And then you got to replace them all, which means more material has to be mined, more solar panels have to be created, more of them have to be bought. So I don't know. I just don't see it going to actual zero. Do I see it becoming more efficient? Yes, but I think there will always be a cost to energy.
So you're talking about the step on the road to get to zero.
But
I mean,
how do
like that
you
that will happen. Yes, you start to source them. What I believe is technology will continue to advance and we will figure this stuff out. I know I'm being hand wavy, but yeah, there will be a point where even when people put on your house, you're right, you're still paying for the sourcing. And there's different ways how this can get funded, correct? So if the government starts to believe, just like healthcare, that having energy is an unalienable right that you should get if you're a human, I could see your tax dollars going to that, the government having a program where people then get
that still
free
costs money
energy.
though. Just
It
because it's
cost,
the government paying for it doesn't mean it's not or sorry, just because the government's paying for it doesn't mean it's free. Then that just goes to your taxes.
sure, what you're
And then
already
there's going to be
paying.
a company getting that tax revenue from the government that's profiting off of it.
That's what I don't know. I was like, are they going to do it that way? Like, it's very unclear to me.
What I think about the future of the energy industry is, I actually think, and there's going to be someone in the comments here who disagrees with me, but I think that the future of the energy industry is kind of going to be going towards nuclear.
Someone did say in the chat that nuclear is unsafe. I
Yeah,
forgot who
and
that was.
I just pulled up that comment from Money with Kazim, but
Oh,
if you actually take a look, I did a full video on nuclear. I actually unpublished it though because it just totally flopped on my channel. But nuclear is actually the safest form of energy production in terms of how many people it have died from nuclear. And unfortunately, when something goes wrong with nuclear, it's a pretty big deal, like, Fukushima or Chernobyl. But also, nuclear technology and reactors haven't really been updated or upgraded since like the 70s or 80s. So if we actually put modern technology into nuclear reactors, they are incredibly safe, and they are probably the cleanest form of energy we can even come close to. So I think that right now, the public opinion and perspective on nuclear is awful, which again, the politics around nuclear is bad. But I think over the long term, people are going to have to shift that perspective on nuclear, because based on all the research I've done, it it's honestly like the only path forward, because currently with the technology we have, solar is just not stable enough to support the grid, because basically with the grid you need a base amount of electricity always in the grid. And then what renewables do, so right now that base electricity is actually fueled by coal and natural gas, which is not renewable. And then what the renewable energy does is it handles like the volatility in the electricity uses. But that base level that you need needs to be replaced with something renewable. And it's not going to be renewable energy like solar power or wind. So the only other option there, in my opinion, is nuclear. And I think at some point the government's going to have to change the public's opinion on that. I don't know if it's going to be in 10 or 15 years, but
Dude, you should go out and change the public's opinion on that. That just got me fired up. I didn't know
we'll
that
see.
you knew a lot about nuclear energy, actually. But
Yeah, I did a pretty deep research because I was looking for investments, because I do believe that nuclear is going to be the future. Um, I think it's unavoidable, unfortunately, but also unfortunately, there's not a lot of good nuclear stocks out there,
you should
except
look up
Brookfield.
nuclear.
Brookfield is getting into nuclear.
Whoa. No, not enough time for BAM. Here's one place where I think that we might disagree here. You seem to think that the grid is going to stay around. We should continue to build things around the grid, meaning there is a like shared energy grid that people then pull from, which has government management. I
Yes.
think that we are driving towards decentralization of energy. I actually think that it is legacy that we have it all centralized, and it did work for a while. And I'm not going to rehash my whole argument before, but I see it getting decentralized. I don't know
I
that
will
I
tell
don't know if that
you,
means that it would or would not be nuclear. And then the other thing, I would love for you to look at nuclear fusion. It is still pretty early technology, but they're starting to create small examples in labs where they are self-sustaining energy sources.
dude, Microsoft bought a contract with a fusion company
Yep.
for. So yeah, dude, if fusion comes, then throw all these arguments out of the window,
No, no,
because
no, no. We're not
that's
throwing
the
it out.
holy
It means
grail.
I'm right because I'm saying costs are going to zero. If you create a self-sustaining energy source of nuclear fusion, is the cost literally zero? No. But maybe the argument is like it's going to be 99% of what it is today. The costs are going to be a hairline. If it's managed by the government, like whatever. I guess we'll see what happens here. We will be quoting this episode on episode 1000 in about 5-6 years and see what happened. Or
Yeah,
we'll
okay.
it'll be the same.
Outside of fusion, I do think that the grid is necessary because, dude, in Canada it gets way too cold. I am not going to be relying on solar panels in the winter when it's cloudy and snow is on my roof for heating my home. Okay? No chance. So I think the grid will, for like the next 50 years, I think we're going to have some sort of grid. I would
Oh,
not
I'm going
rely on.
under 50 years for sure. Let's
All
do
right. All right.
$100 bet on stream. 50
Cool.
years. So 80-year-old Daniel, Pronk, and Jake, if we're still here, will settle that bet. When money is inflated enough where $100 is a tip you give on a cup of coffee.
Yeah, no kidding.
All right, we got about 7 minutes here. That was a super fun conversation. David, thank you so much for that insightful comment. If anyone else has got Galaxy Brain thoughts, we love hearing them in the comments. We are the one. You did make it. Welcome to the stream. Daniel, not sure if you're seeing any comments here. If you commented something before and we didn't see it that you still want us to check out, now is a great time. At the end of the streams, we usually just like to BS with y'all a little bit and take a couple more of your stocks to analyze. But Daniel, I can't believe that we've made it to episode 35. I mean, this has been an incredible journey, and there are 90 people live with us right now. So thank you so
Yep.
much.
Knockabout asks, this would be a good time to ask your thoughts on hydrogen stocks. I just haven't found any yet that are profitable. And like the technology just seems like it's still a little bit too early. And it seems like there's a lot of concerns about it too, like those hydrogen cars. I mean, theoretically, if our cars ran on hydrogen, the byproduct is water, which is, that's great. We're not putting CO2 into the air. But I've heard that there's a lot of problems with storing hydrogen. And then also, hydrogen is very explosive. So then if you get into a car crash, for example, and your car is full of hydrogen, that's probably not a good thing. So and I'm going to be honest, I haven't really looked into hydrogen in a while and if these problems are being solved, but when I looked at it like 2-3 years ago, that's kind of the consensus I came to.
Dude,
I
fair
just
enough.
think it's too early. To summarize that, I think it's too early for me to get super bullish or interested in it right now.
Yeah, I haven't looked into it at all.
Yeah. Sorry, I'm reading comments. I am very, very full. Sorry, not full. What am I talking about?
What?
I shouldn't read comments and talk at the same time. It's too much brain
Dude, I'm
things.
so full of stocks and energy conversation.
Yeah.
Speaking
Yeah.
of the energy conversation, Sebastian did have a really great comment here. Fusion is always 20 years away, been like that for 50 years. You're right. It does always seem to be 20 years away. I think that we might enter that with a pure AGI as well. So AI has been making a lot of advancements. I actually watched. So for people who invest in stocks, Mark Zuckerberg just did an interview on the Lex Friedman podcast, which was a great, great interview. I listened to most of it. I think I have about 20 minutes left. He talked a lot about the Apple VR set. Lex was asking him lots of questions about how Facebook thinks about AI, open sourcing things. And for those of you who want to keep a pulse on both the AI, AGI world, as well as just what's happening with these lenses, virtual reality, mixed reality type headsets, does seem like they're starting to pick up steam with the Apple update. So highly recommend checking that out. I'm going to actually get that up on a different screen, Daniel, so I can share it. Do you listen
sure.
to that podcast, or do you listen to any business podcasts that you'd recommend for the chat?
Yeah, it's funny you say that because I was listening to that Lex Friedman podcast yesterday. I didn't finish it, but I was listening to some of the clips. Lex Friedman, great guy.
Dude, I was listening to that podcast yesterday. That's so cute.
Yep.
What were some of your favorite parts about it?
I only listened to a few clips. I've been very busy, as you know, with life stuff. But yeah, basically Zuckerberg was saying Apple's technology, if anything, is kind of verifying what Meta is investing in right now because Zuckerberg was like, we were the only company that came out with these headsets, and everyone was saying that this is a very dumb idea. We're wasting our money. And now you have the largest company in the world coming out with their own headset. And he was like, people should be viewing this as like a good thing for us because it's verifying, the investments we're making. And it's going to put a lot more eyes on it. And the interesting thing about this is Meta has been working on headsets for a long time. And people have been very bearish against these headsets. And then Apple releases their headset. And then you go on Twitter, and a lot of people are like, oh my goodness, this is the future of technology. Like, these headsets are amazing, blah, blah, blah. It's like, Meta has literally been working on this for 2 years. Where was all this bullishness the last 2 years on headsets? I didn't see it.
It's the Apple fan crew. It is all the hypnotized people who are hypnotized by the blue colors of the text messages. One thing I found interesting is yeah, definitely taking a jab at Apple, folks, but love y'all. One thing I found super interesting was Mark talking about the trade-offs of design, price, and things like that, because what Apple went for is they have a higher priced headset. They definitely put a lot more money into the hardware and optics. And I'm trying to requote Mark here for actually getting a very, very crisp screen, as opposed to making sacrifices on that for cost. So in Apple's typical fashion, they're coming out V1, very high charge headset. You have to carry around a battery pack. They're predicting low sales, but they did take a stab at Mark. I think that they said they're going after like 80% market share or something. So there's definitely a VR mixed reality battle going on, which is funny because a lot of these companies are also battling each other with AI bots, advertising, things like that. So the showdown of the tech giants continues. I think there's room for both, Daniel. I see Quest as being more of a everyday person, more of like an Android users type device. I do think that Apple users will continue to buy the Apple headset. Their brand is very strong. I can't understand it, but as you said, Daniel, on Twitter, people always seem to love when they drop products. And
Yeah.
to give credit
Also,
where
what
credit is due, it looks
I
good.
I agree with you that there's probably room for both. In that same podcast with Lex Friedman, Zuck said basically the exact same thing. He said Apple looks like they're more focused on a niche part of the market. Like if you watch Apple's release, their demo release, there was no gaming and there was no social interaction. Whereas Zuckerberg wants their headsets, Meta headsets, to be way more focused on gaming and way more focused on social interacting and creating those social connections through technology. And Apple just seems like that's not what they're focusing on. It's very much so like you put on your headset and you block out the world and you just focus on what you got to do. And yeah, Zuckerberg was basically just saying two different companies, two different strategies. Let's see how it plays out. He's very bullish on his, obviously, but it was interesting. Definitely interesting.
Yeah, it's unfortunate, in my opinion, for selfish reasons, what people focus on for mixed reality stuff. Obviously, there's the huge play where you could play games. Maybe you could get like a cooler browser, desktop setup. I think the things happening in the professional like training space, both for like on-job training and warehouses, also when you get into doctor degrees, actually being able to train brain surgeons, people like that with more realistic virtual reality generated just like trainings for them to go to. There are a lot of companies that are small jumping into like super niche areas as well. So as we see this entire category of product get created, I am really on my toes just seeing like how generalist is this going to be. Is there going to be a different type of headset for different types of people? Is it going to condense into one? It's really hard to tell at this point, but it does
Yeah.
feel like the tides are changing. I think the first versions of these headsets are definitely, it's slow to adopt things. And one thing that I found super interesting is even though technology will come on the scene super quick, the amount of time it takes humans to adopt technology is extremely hard. So even when like the internet came on and things like that, we're all just, monkeys running around a rock basically. And it does take us time. For example, Daniel, so many people are not using AI. I'm using AI to generate emails, do so much things. And I'm talking to my friends about it. I'm like, hey, here's how you can use it. And we're all about 30 at this point. And it's baffling me that people aren't changing their habits. And I hear people on other podcasts talking about how when the internet came out, you had your 40, 50-year olds working at the office. They would just have their secretary do the computer stuff. They wouldn't touch it, just hand it to me in paper. So it's interesting to see that play out here too. It's been out for at least 5 years now. I think even if you go back to the HoloLens, I think that dropped in like 2017. Seems like,
Yeah.
the consumer might be warming up to this now. We'll see how the sales
Yes,
do.
Zuckerberg thinks that headsets will replace computers. He thinks it's going to be the new computers.
Wow.
We'll see. I mean, go back and take a look at the first computer, how big it was, and now take a look at laptops today, right? So, I mean, we're seeing the first version of these headsets over time. They literally could become glasses that you put on,
A
and then
little
you
contact lens.
or contact lenses that you literally cannot even see, but you have augmented reality on you 24/7. Who knows? That could be the future, but currently, I'm not very bullish on walking around with a headset on that big. I'm not going to pay 3,500 for it.
You don't want to walk around with a battery pack in your back pocket, but it has
No.
the Apple logo on it, dude. Everyone's going to think you're the coolest cat in town. Come on.
Got to get all that envy. Sebastian earlier said, by the way, if you are interested in the energy problem, going back to a previous conversation, there's a pretty good book by Bill Gates, How to Avoid a Climate Disaster. Is a pretty good book. I read it. I got it in the office. It is a good book. I would definitely recommend reading that if you're interested in the current problems of the energy sector and what the world is trying to do to basically fix them. Lots of insights in there. Basically touches on every single energy technology and what it's going to look like in the future.
Interesting. So David gave us the great comment before that started the energy conversation. David is back here in the chat. Thank you for these comments. We really appreciate them. From David, Apple made the leap from entertaining headset to capable computing platform. That's why there is new hype. Imagine a computer where your eyes are the mouse. It's amazing. Meta didn't do that. I actually do think that Meta Quest 3, at least, it does have the hand gestures as well. I know Apple did that thing where you went like this and it clicked. So I will have to fact check that. But I do, or at least Mark made it seem like when I was listening to his podcast that they did have those abilities. But yeah, it is great. Apple arguably is the best product design company ever created. At least I don't even like Apple products, by the way. So coming from me saying I think this looks good, it's saying a lot. I don't think I've ever said that about something from Apple. Grape Jelly, you made it at the end of the stream. Hello, friends. Great to see you. Yes, if you are listening to the recording, come hang out with us live sometime. You want to take any more of these questions, Daniel? We are about at the hour mark.
Yeah. We are one. So, by the way, Daniel, not sure if you already mentioned it because I was late, but hope all is well with your cats. They are good. They are healthy. They're back home. They're back to annoying us. So everything's good.
Here's a funny story. Daniel and I were in a meeting with each other, and I started cracking up because I'm looking at his screen, and this animal, which was his cat, tries to jump on his chair, totally like half misses it, and just starts freaking out. If you can't see the screen, I'm like waving my arms like an animal, and the cat just totally ate it. Was okay, which is why it's funny. The cat was not harmed in the making of that video. I was really hoping that something funny would happen this time, but I haven't seen any cats there. There
No.
might be a little bit traumatized from the Lily experience still.
No, they're not at all. They're good.
They're good. Good thing that cats don't remember things that long, or they don't seem to.
Yeah. Okay. Do we want to answer any more questions? Do you have anything, Jake?
I'd say check out for one comment. Just going to give a little stream chat. Thank you for the 112 people who are watching us live right now. We go live every single week. We are a bunch of stock nerds talking about stocks and having conversations around the economy, where the market's going. If you're liking what you're seeing, give us a subscribe. Check us out on Spotify. We are trying to grow. And if you haven't seen it yet, Stock Unlock is the software platform we are creating. We have thousands of global paying users, but still are pretty undiscovered. We appreciate everyone's support, and you should definitely check that out. It's totally free to try. If you like stocks, you want a new portfolio tracker, stock screener. If you're new and you want training wheels and an app that has little question mark icons everywhere, which we did, you can learn how to read financial statements, use discounted cash flow calculators. I'm going to drop the link in the chat. And seriously, big up. Thank you for everyone hanging out. It wouldn't be fun without you all, so appreciate it. Not sure if you saw any more comments here, Daniel. If you want to take this one in for a soft landing, as Joe Powell has been telling us.
No, I think I'm good. I mean, I could talk about a couple of stocks, but I feel like at this point that's just kind of off topic.
People are egging me on, so make sure we don't go too deep here. But Grape Jelly, also, I've seen you here for the last few weeks. Thanks for coming and hanging out. Always love your name. Stock Unlock has helped me find some gems. Only subs service I pay for besides YouTube Premium. That means a lot. That means a lot. Thank you so much. And then from Thatcher's World, thanks for all you do, guys. Just subscribed. Thank you so much. If it wasn't for you guys, we wouldn't continue to be able to taking this on full time. And we have huge plans for Stock Unlock. This is only the beginning.
Yeah, if you guys haven't seen yet, as we said near the beginning of the stream, we just added in 8 new stock-based compensation metrics. So it's not just stock-based compensation, but we also show you, how is the company trading relative to its free cash flow, excluding the stock-based compensation that was added back in, and stock-based compensation as a percent of revenue, operating cash flow, free cash flow, and a bunch of different metrics. These are pretty high value metrics that have been asked for by a lot of people. So definitely go and check these out.
Yeah, big plus one. If anyone's looking at the video, whether you're on Spotify or on YouTube, I have it up right now. We have around 8 different metrics to pick from in the freeform tool. And when you're looking at a company's cash flow statement, you can see operating cash flow, removing or rather excluding stock-based compensation, as well as a lot of these metrics you see here. We divide stock-based compensation into other cash flow line items, so you can get a more real view of what the actual cash flows are, since we understand and actually agree with a lot of investor sentiment around stock-based compensation actually being an expense. So,
okay, I have a comment here from Knockabout, which is an interesting idea because I've actually thought about this, and we're going to do it right now. So, fun idea: name a stock and let the live stream viewers provide input regarding analysis on it the following week. Good to see other approaches.
Are we giving people homework?
Yep. So if you want, there is a stock that I am currently researching. I have not purchased it, but I am highly interested in it. It is, let me make sure I get the ticker right.
Can I guess?
You're not, I am very confident you're not going to guess this one. So go ahead.
Oh, well, I still want to guess. Was it Pinduo? I think you were looking at an Asian company that you said you were considering. All right.
No,
well,
it's not that one. This is a new stock. I will share it on my screen. It's not a bank stock. Surprise, surprise. All right, everyone. It is
Snapchat.
Nope.
Snapchat. For those of you who are watching the here for a while, we are not very bullish on Snapchat. We are bearish on Snapchat.
Okay, so there will be almost no data for this company on any platform because this is a new spin-off. It's a spun-off ticker, spun-off company. So again, you will not have any data. You will have to go to the company's actual investor page and take a look through their SEC documents to find data on this company. Did Jake
Daniel,
just
I
leave?
might need to leave the stream early because I just had a coffee spill.
Lol.
I'm freaking out.
No, but the ticker. All right, Jacob. I'm gonna pray for you.
Yeah,
But
there's coffee dripping all over the carpet, man. I'm sorry.
sounds good. Okay,
Can
this
you remove me from the stream? Actually, I can't use.
you're gone. No, the ticker is ATMU. I will put it in the chat here. So I'm currently researching this one. Knockabout, if you want to go and research this one as well, then do it, because yeah, maybe we can talk about it on the next week's stream. And I'll try and do more research this week. But so far, based on everything I've seen, it looks like a very compelling opportunity. And it doesn't look that expensive. But obviously, go do your own research. I'm not a financial advisor. I'll cover Jake there. But yeah, ATMU, go take a look at it, research it, and then we can talk about it next week in the stream. Have a little group discussion if you like. But Jake is gone. We went overtime, so I'm going to wrap it up, everyone. Thank you so much for watching. Thank you for all the comments. We really appreciate the support. Had over 100 people in here today. That's incredible. And yeah, just thank you everyone so much for coming. And I'm going to end the stream now. So I will see you all next week.